Would you like to invest in a business model that's been successful for centuries? Like the idea of being invested alongside Warren Buffett? Want a market-beating yield and double-digit dividend growth? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, please give us a big thumbs up if you find value in our videos. Helps us to get the word out and grow the channel, and I'd really appreciate it. And make sure to stay tuned until the end of the video for a special news announcement. I want to tell you about a high quality stock that pays big, growing, reliable dividends. These growing dividends are funded by growing profit because this business is a large bank providing critical financial services to millions of people. The banking business model dates back thousands of years ago. Why has it been around so long? Because it's necessary, critical, and highly profitable. Banks can practically print money by taking it at one rate and lending at another. That means plenty of growing profits and growing dividends. I've personally invested in stocks just like this one on my way to going from below broke at age 27 to financially free at 33. By the way, I explain exactly how I achieved financial freedom in just 6 years in my early retirement blueprint. If you're interested, you can download a free copy of my early retirement blueprint using the link in the description of this video. Getting back to the stock I'll tell you about today though, perhaps best of all, it looks undervalued right now. Price is what you pay, but value is what you get. Why is that important? Because buying a dividend growth stock when it's undervalued should provide for a higher yield, greater long-term total return potential, and reduced risk. With this in mind, I want to share with you an opportunity I recently came across in shares of US Bancorp, which appear to be trading at a significant discount today. US Bancorp, stock ticker USB, is a bank holding company that offers a diversified mix of financial services, including traditional retail banking, wealth management, commercial banking, and payment services. Founded in 1863, US Bancorp is now an $83 billion by market cap banking juggernaut that employs nearly 70,000 people. Operating as the fifth largest American bank by deposits, US Bancorp has branches in 26 different states, primarily in the Midwest and West. US Bancorp reports results across 5 business segments: consumer and business banking, 41% of fiscal year 2020 revenue, payment services, 24%, corporate and commercial banking, 19%, wealth management and investment services, 12%, and Treasury and Corporate Support, 4%. The banking business model is one of the oldest business models in existence. The fact that banking has been around since ancient history tells you a lot about its staying power, and that staying power is grounded in the necessity of banking within society. That necessity and staying power makes a bank an attractive asset to invest in for any long-term investor. But a bank is even more attractive because of its float, the low-cost, low-risk source of capital that's built up by taking deposits and doing business, which can be used to earn a return on. It's making money from OPM, other people's money, and because bank assets tend to be very sticky, the returns can be highly lucrative and predictable. Perhaps that's why Warren Buffett has over $7 billion invested in US Bancorp. Another reason Buffett might be invested so heavily in this bank? Growing dividends, which Buffett is known to have an affinity for, as do I. The bank has increased its dividend for 10 consecutive years. That's about to be 11 consecutive years, as they've already pre-announced a plan to increase the dividend by 10% starting in the third quarter. That's pretty much right in line with their 5-year dividend growth rate of 10.9%. And that double-digit dividend growth is layered on top of the stock's current yield of 3%. This market-beating yield, by the way, is 30 basis points higher than the stock's own 5-year average yield. And with a low payout ratio of 39.5%, the dividend is easily protected and positioned to continue growing. I like dividend growth stocks in what I refer to as the sweet spot, a yield of between 2.5% and 3.5% paired with a high single-digit or better dividend growth rate. This stock is squarely in the sweet spot. Looking at business growth, US Bancorp grew its revenue from $18.574 billion in fiscal year 2011 to $23.226 billion in fiscal year 2020. That's a compound annual growth rate of 2.51%. Meanwhile, the company increased earnings per share from $2.46 to $3.06 over this period, which is a compound annual growth rate of 2.45%. Ordinarily, these would not be good numbers. However, we know that banks were greatly impacted by the pandemic during 2020. Economic shutdowns and loan loss reserves combined to create a result results for the year. If we were to back things up just 1 year, the 9-year compound annual growth rate for earnings per share ending in fiscal year 2019 would be nearly 7%. In my view, that's really a far more accurate picture of the company's true bottom line growth profile. Looking forward, CFRA is projecting that U.S. Bancorp will compound its earnings per share at an annual rate of 5% over the next 3 years. That looks conservative to me, especially when compared against a more normal growth environment for U.S. Bancorp, which would seem to lend itself to high single-digit earnings per share growth. That said, we're in anything but a normal environment right now. There is still much uncertainty as it relates to the recovery and post-pandemic economy. I think it makes sense to be conservative in that sense, but this would be more of a low-end expectation in my mind. A lot of U.S. Bancorp's near-term and long-term growth trajectory will, of course, depend on interest rates, and on that front, it does appear likely that rates will rise from here, even if at a modest level. U.S. Bancorp has long benefited from rather stable earnings on the back of a large mortgage business, and payments, up 39.5% year over year for the second quarter, gives them a nice growth kicker to balance things out. With the payout ratio being so low and the recovery off to a strong start, I believe the bank will deliver at least high single-digit dividend raises for the foreseeable future. Moving over to the balance sheet, the bank has a fantastic financial position. They have $554 billion in total assets against $500 billion in total liabilities. Their senior unsecured debt has the following credit ratings: A2 Moody's, A+ S&P, A+ Fitch. These ratings are well into investment grade territory. U.S. Bancorp's profitability is quite robust, going head to head with some of the best banks out there. Over the last 5 years, the firm has averaged annual net margin of 26.96% and annual return on equity of 13.57%. Net interest margin came in at 2.68% last year. This is a great bank across the board, which is surely why Buffett is so keen to put billions of dollars to work here. And with the economies of scale, switching costs, established relationships, and the built-up float, the company does benefit from durable competitive advantages. Of course, there are risks to consider. Competition, regulation, and litigation are omnipresent risks in every industry. Banks are highly exposed to economic cycles. Recessions hurt the bank through reduced deposits and loan demand, as well as higher credit losses. If there are any lasting economic scars from the pandemic, this could create long-term growth headwinds for the company. Persistently low interest rates continue to challenge banks in general, although the prospects for rates to continue rising over the near term are good. With these risks out in the open, I still believe that U.S. Bancorp can make for a great long-term investment. That's particularly true with the valuation being as attractive as it is right now. The stock is trading hands for a price-to-earnings ratio of 12.2. That's less than half that of the broader market's earnings multiple. It's also lower than the stock's own 5-year average price-to-earnings ratio of 13.8. The price-to-book ratio of 1.8 is precisely in line with the stock's average price-to-book ratio over the last 5 years. And the yield, as noted earlier, is materially higher than its own recent historical average. I valued shares using a dividend discount model analysis. I factored in a 10% discount rate and a long-term dividend growth rate of 7%. This dividend growth rate is well below the demonstrated long-term dividend growth rate for the company. It's also very close to the pre-pandemic long-term earnings per share growth rate. Keep in mind the most recent dividend increase, which will be realized this quarter, is 10%, and the payout ratio is rather low. While earnings per share growth over the next year or two could be a bit sluggish, as CFRA hints at, the long-term dividend growth story here looks strong. The dividend discount model analysis gives me a fair value of $65.63. The reason I use a dividend discount model analysis is because a business is ultimately equal to the sum of all the future cash flow it can provide. The dividend discount model analysis is a tailored version of the discounted cash flow model analysis, as it simply substitutes dividends and dividend growth for cash flow and growth. It then discounts those future dividends back to the present day to account for the time value of money, since a dollar tomorrow is not worth the same amount as a dollar today. I find it to be a fairly accurate way to value dividend growth stocks. Morningstar rates USB as a 3-star stock with a fair value estimate of $55. CFRA rates USB as a 4-star buy with a 12-month target price of $64. I came out slightly high this go around. Averaging the three numbers out gives us a final valuation of $61.54, which would indicate the stock is possibly 8% undervalued. Here's the bottom line, guys. U.S. Bancorp is a high-quality bank benefiting from durable competitive advantages. It has the Warren Buffett seal of approval for good reason. With a market-beating yield, double-digit dividend growth, a low payout ratio, 10 consecutive years of dividend increases, and the potential that shares are 8% undervalued, long-term dividend growth investors would be wise to consider investing alongside Warren Buffett in this company. And now for a special news announcement. Williams-Sonoma Inc., stock ticker WSM, just reported blowout Q2 numbers, beating earnings per share expectations by a full 63 cents. Their comparable brand revenue growth was nearly 30%, which is astounding. I've highlighted this stock a number of times on the channel, including when I called it out as an undervalued opportunity late last year when the stock was under $100 a share. Yet even with the repeated coverage, a lot of viewers have complained about the valuation and said the stock was too expensive. I disagreed, and I'm sticking to my favorable opinion, especially after this quarter. If you're not already invested in this business, do consider changing that. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about this stock. Please make sure to subscribe to the channel and ring that notification bell so you don't miss out on new content. Also, take a look at the description box below for some important links, including the link to my personal stock portfolio. This six-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who have been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.